When Elon Musk said that companies would go bankrupt within the next 12 months, I don't know if he was talking about Nissan. But once you do the research, once you look at all the data, well, yeah, it's very compelling. Not only does Nissan make a loss on every single electric car it sells, just like all of its other legacy automotive peers, it makes less money on every car it sells than all of its other legacy automotive peers. I mean, looking at Nissan's profit per car, it's staggeringly low. It's much lower than, for example, Mercedes-Benz. It's much lower than, for example, Stellantis' EVs. Stellantis' cars from its many brands, or than BMWs, or than Volkswagens, or than Toyotas, or than Hyundai Groups, or than GMs, Hondas, and Fords. In fact, Nissan makes less money per car than pretty much everyone. The downgrade of Nissan Motors' credit rating from investment grade to junk by S&P Global only a matter of a month ago was largely ignored by most of the media. But this marks the start of a cycle that could see $55 billion of so-called fallen angels this year, said fund managers. Global supply chain disruptions, higher labor costs, and persistently high inflation in a slowing economy is expected to hurt companies in cyclical sectors like automotive, home building, and industrials, leading to further downgrades and even bankruptcies. S&P cut Nissan's rating by one notch to BB, to BB plus or junk, saying its profitability will remain weak, in fact weaker than its global peers, in other words, its competition, as demand for new car sales in the United States and Europe put pressure on its sales prices. But Nissan's problems are far greater than the challenges it's facing in America and Europe. We're now reaching that inflection point. We are going to start seeing that recession squeeze on companies' earnings, said Jason Friedman, global head of business development at Marathon Asset Management. Nissan had $10 billion in outstanding US dollar bonds, making it the largest fallen angel since 2020. Elon Musk just said that we're about to have a crazy thing happen. He said the economy is going to collapse, basically. Maybe not quite collapse, but it's going to have some catastrophic major structural issues over the next 12 months. He said, don't worry, Tesla will be okay. And I think that's probably true, considering they have $20-something billion in cash and basically no debt. But there is one car company that's in trouble. In fact, in a lot of trouble. And I'm not talking about Lucid, or Canoo, or Lordstown Motors, or Rivian, or any one of those other car companies that you all know, Fisker. You all know that, they're basically basket cases, to be fair. Great cars, some of them. Fantastic cars, some of them. Terrible financial position, most of them. Here, the problem lies with one major automaker. Now, I read an article on Electric, right? Electric saying, yeah, we can see all these problems happening, but Elon Musk is probably right here. But who do you think is going to go bankrupt? Well, I believe I have the answer. And I'm going to give you a really good argument as to why this is who it is. Hello, my friends. Welcome to the channel. I'm the Electric Viking. My name is Sam Evans. Thank you for tuning in. Great to see you. Welcome to all the new subscribers, all 10,000 of you over the last month. Great to have you. The company that is probably in the most dire straits that you don't realize is actually Nissan. Yep, it is Nissan. I'm going to explain why. Only a few years ago, Nissan sold nearly 6 million cars. Last year, it sold 3.2 million. It has a high debt to asset ratio. In 2021 and 2020, it had negative margins. Last year, it had the lowest margins of any major high-selling automaker in the world. However, most analysts believe that the reason Nissan actually made a profit over the past 2 years versus the previous 2 years is simply because of the devaluation of the yen. It's enabled them to actually make what is essentially paper profits. And if you're thinking, well, no, Nissan, they're too big to fall, well, I can tell you now, the S&P doesn't think so. In fact, their debt has been downgraded to junk. The S&P said this: performance at the company has been sluggish for more than 3 years. We now expect its earnings will remain weaker than we previously assumed, given the prospect of another difficult year in 2023. S&P said that, and it's turned out to be more true than what the S&P actually realized. A junk rating, what does this mean? This means that Nissan has to pay higher costs to sell foreign currency bonds abroad. While the Yokohama-based company sold a yen-denominated sustainability bond in January, it last sold dollar and euro bonds in 2020. The price of its dollar-denominated note maturing in 2027 dropped 0.2 cents to 91.1 cents on the dollar. It has fallen significantly since the beginning of this year. Japanese bond issuers with junk ratings include SoftBank Group Corporation. There's a few others as well, but the point is here, one of the few companies in the world with a debt rated as junk by S&P is now Nissan. And this happened before S&P would have known about what has just come to pass in China. Now, China doesn't matter, does it? Well, actually, it does. When it comes to Nissan, in fact, it matters more than anything else, more than you can possibly picture. Basically, what S&P is saying here, they chalked up Nissan's success of the past in 2022, simply to a weak yen. Now, Nissan targeted sales of 5.4 million vehicles in 2022, and their sales were nowhere near those numbers. In fact, they only sold 3.2 million cars, meaning they sold 2 million less than they should have. Here's the big problem though. Of the 3 million cars that Nissan sold, 1 million of those were in China. 1 million of those were in China. In fact, 50% of Nissan's profits came from China. However, there's a big problem here, and it's one that I believe people don't realize. S&P didn't just downgrade Nissan to junk because of that reason alone. They downgraded Nissan to junk because of what exactly is going on at the moment. Nissan is losing market share very, very quickly. Its 2022 business results, and well, they're worse in 2023, but I'm going to get to that in a second. Nissan had a tough year. Its sales fell 21% to nearly 3.2 million vehicles versus 4 million the previous year in 2021. Unfortunately, this is a trend because their sales have gone down now every single year for 5 straight years. In fact, no, 6 straight years. The numbers fell in every major region for the company last year. Sales in Japan were down 1%, but they fell 25% in the United States, 24% in North America, and 23% in China. A really, really terrible thing happened in December of last year, one that no one has really noticed here. Of course, China makes up 1 out of every 3 Nissan vehicles now sold worldwide. And in the month of December, Nissan's sales in China actually fell by 75%. Everyone thought, well, this must be an aberration. Surely this is just a bad month for Nissan. It can't continue this badly, right? Well, actually, it pretty much has. Now, the only reason that no one has really noticed what's just happened in China is because in the month of April last year, China basically shut down. It shut down all of its factories because of the COVID pandemic. Tesla was forced to shut down. You've probably seen Tesla's delivery numbers in April were abysmal, almost nothing. Most car makers in the month of April last year were basically in hibernation. They were forced into hibernation. So Nissan sales last year in April were very small. There were only 38,000 vehicles because all their factories, most of them in China, were shut down. Well, this year, Nissan's factories weren't shut down in China, and yet their sales were even smaller than when their factories were forced to close last year. In fact, Nissan sales this year are down 40% in China. And the biggest problem here that Nissan have is that the majority of their sales in China come down to one single car model, the Nissan Sylphy. It used to be the best-selling car in China, period. In fact, it led the sales charts for quite a number of years. It's no longer the best-selling car in China, not even close. Why is it not? Because it's not an electric car. There is a new e-power version, a hybrid version, but there's no electric version. And as far as I can tell, there's no electric version even coming. But the problem here is China's consumers are moving away from internal combustion engine vehicles and they're beginning to buy EVs. They're also moving away from sedans, and the Nissan Sylphy is a sedan. Now, if the majority of Nissan sales in China are based on one model, the Sylphy, and that's no longer a car that people want to buy anymore, then what is Nissan going to do? Well, they're just going to continue to lose market share in China in a very big way. Now, Nissan has a lot of debt as well. Whilst Nissan's $30 billion of debt may not seem all that bad, the problem is that, more than 90% of the cars Nissan currently sell worldwide are internal combustion engine vehicles. The Nissan Leaf was once very popular, but it's now a very slow seller, and it doesn't rank on any global sales charts in the top 10 or in the top 20 for that matter. This means that Nissan is in a position where it will have to write off massive debts that are worth basically nothing. Production lines that produce internal combustion engine vehicles, they may not have to write it off now, but it's only a matter of time before those production lines become completely obsolete. And then those so-called assets are no longer assets. They're simply debt problems that Nissan have to deal with. At the same time, Nissan have to build production lines. They have to build the capacity to manufacture the products that people actually want, electric cars. So whilst doing all of this, it's losing market share at its fastest pace in history. Its sales have fallen every single year now. For 5 straight years, it's gone from selling nearly 6 million cars to 3.2 million last year. This year, it's already lost massive market share in China in comparison to where it was at last year. In comparison to where it was at several years ago, it's just basically looking like a complete hopeless case. That is China, and that does matter because that's now 33% of their global sales. Do Nissan have the capacity to turn things around at this point? I would say no. I believe it's too late. I think the world is electrifying at an incredibly fast pace, and Nissan just isn't in a position to catch up. If you think I'm exaggerating about these problems, consider this. The Nissan Sylphy, their internal combustion engine sedan, has lost around 50% in sales this year versus last year. And the problem here is that it represents exactly 52% of all of Nissan's car sales in China, but it also represents a significant percentage of Nissan's sales in the United States. 500,000 Sylphys were sold in 2022, when a total of 1 million cars were sold. That means if people stop buying the Sylphy, 50% of Nissan sales in China simply disappear. And the reality is, why would you buy a Nissan Sylphy? There's nothing compelling about it. Whether it's the price or the actual car itself, nothing stands out to me as being an industry leader in any way, shape, or form. I've read all the articles about the current Sylphy, and I don't see why anyone would be interested in buying it. And that's the reason why Nissan are falling behind. They don't have any compelling product to sell in China right now, or really, to be honest, in any other market. Tell me what Nissan product that they have really stands out as being an industry leader, one that they can use to kind of spearhead their way into a new electric revolution. There aren't any. And if there is any, well, it'll be too late. But I haven't yet mentioned the biggest problem for Nissan. Of the other 500,000 vehicles that they sell in China, well, most of them can no longer legally be sold as of a month ago. Fortunately for Nissan, the Chinese government gave them a lifeline. The Chinese government extended the deadline by 6 months, meaning Nissan have 6 months to completely change the products that they sell. What am I talking about? Well, the emissions regulations rules in China stipulate that basically most cars that legacy automakers sell in China today can't legally be sold according to China's new rules. They breached the emissions regulations. So Nissan has maybe, what do you think, 6 months max in China before they lose at least 70% of their market share. Now, obviously, Nissan's second most important car market in the world is the United States. And I've had a look at every single car that Nissan sell in the United States. None of them are compelling. The Nissan Leaf doesn't qualify for EV incentives because, well, it's not made in the United States. And it's really not a car that anyone is really interested in buying anymore anyway. In the United States, Nissan, well, they sell a lot of cars. Well, relatively speaking, they do. However, if you look at Nissan's sales in the US, the big problem is this. So far this year, they've sold 63,000 cars and 114,000 trucks. Now, Nissan have no plans for electric trucks, which make up the large percentage of the vehicles they sell in the US. How long will it be before customers say, well, yes, your product is old now. We're ready to move on. Well, I think that point is basically now. And if it isn't now, it's going to happen very soon. Let's summarize this. Nissan has had their credit rating downgraded to junk. Their sales in China are collapsing at a record rate. Their global sales have shrunk at a record rate. They have a lot of debt. And, well, they don't make many electric cars or have the ability to make many electric cars. Yeah, Nissan, you're screwed. I'm sorry, but that is just the truth. My friends, let me know your thoughts in the comments, and thank you for watching.